There was quite the debate on this question. And the debate was really, would you go to Yellowstone with your team, the accounting department? I said, absolutely. Why would you ever turn down a trip to go to Yellowstone? Now, essentially, the accounting department, they are planning a team trip to Yellowstone. And on December 15th of year one, the accounting department had to reserve a cabin. Now, this cabin reservation company, they required the reservation fee to be paid in full, which was $10,500 at the time of booking. Now, remember, the trip will not be until year two. And this is actually fairly common. We've all booked trips that require us to make a prepayment, especially if you've ever reserved a Airbnb or VRBO. Now, because the reservation is fully refundable up until the date of stay in year two, how could the cabin reservation company record the prepayment when it's made on December 15th, year one? All right, so we'll think about the journal entry that the cabin reservation company would make, as well as the company that is booking this trip. We'll look at both sides of it, but ultimately we're going to be focused on what the cabin reservation company would record. Now, obviously, the accounting department, they are going to be paying the $10,000 500 prepayment, right? That's going to be cash. Now, they aren't actually going to record any expense yet because the trip is not until year two. And the cabin reservation company is going to be receiving this cash, but they cannot yet record the revenue, right? So they're going to have to record a liability. So starting with the cabin reservation company. So on December 15th, year one, the booking is made. So the cabin reservation company, they would debit cash because they're receiving that cash, and then they would credit unearned rental revenue, which is a liability on the balance sheet. And that would be for $10,500. Right, so now they have the cash, but they don't actually have ownership to it because the reservation hasn't actually occurred yet. Right? So that's why it's unearned and it's a liability on the balance sheet. Now, for the accounting department, they would record a debit to prepaid travel or prepaid expense for this trip that they made payment on, but they will not be actually using until year two. And then they will credit cash for $10,500 for the cash outflow. So those are the journal entries that each party would record for this prepaid reservation for this trip that will occur in year two. Now, remember, this is to Yellowstone National Park. It's a beautiful, beautiful place. But at the end of the day, we got to know our journal entries. So let's not lose sight of that. So the correct answer, because it's specifically asking about the cabin reservation company when the prepayment is made, that will be a debit to cash for $10,500 and a credit to unearned rental revenue for $10,500 as well.